In a contract account, we have got two parties are there. One is called contractor, another is called the contractee. If the work certified is 50% or more than 50%, less than 90%, you have to charge 2 by 3. It's a law. Direct material, direct labor, direct expense is the prime cost. Add factory expenses, add opening work in progress minus closing work in progress is your nothing but factory cost. Hello my dear student, I am Dr. B.S. Subramanian, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today I am going to hand Advanced Cost and Management Accounting 1. We call this ACMA Session 2. In the last session, we discussed the 5 marks, we discussed the 10 marks. Today, we are going to discuss about the 15 marks, only practical question. So, they will ask about 5 questions. You have to answer any 3, each carrying the 15 marks. So, today, we are going to solve the question. One is process account. One is contract account with a balance sheet. Number 3, reconciliation statement. Which are the 3 we are going to solve now? One is process account. Second is contract account with a balance sheet. Number 3, reconciliation statement between the cost account and the financial accounting. Each one carry 15 marks. Only practical problems have to be dealt now. So we'll move on to problem now. So in a manufacturing concern, a product passes through 3 processes and finally to finish its stock, the details are under. Transfer to next process, 66 2 by 3%. Transfer to warehouse, 33 1 by 3%. In the second process, only 60% will be transferred to next process. 40% has been retained in the warehouse. Whereas in the finished product, 100% will go to next process, that is the warehouse for sale. So for the month of March 2020, the details of expenditures are process A. They've introduced how many tons? 2,800 tons of material at rupees 40 per ton. B, 320 at rupees 64. C, 2,520 tons of material at rupees 28 per ton. Then in each process, the total weight put 4% is wasted and 6% is scrap. Means 4% is waste, no money has been realized. 6% is scrap which has been realized at rupees 6, at rupees 10, at rupees 12 per ton in A, B, C process respectively. And the further expenditures of labor cost, A, 20,608, B, 12,560, C, 11,580. Then office and administration expenses for the month of March 2020 were 15,567, which is to be charged equally for all the process, that is divided by 3. Prepare the process cost account, calculate cost per ton of each. So your amount is 15,567 divided by 3. Office and administration expenses. 15,567 divided by 3. 5,189. For each process, it is 15,567 divided by 3. Each process, the expenditure goes to 5,189. So we'll move on to process A. So, particulars, tons, value, particulars, tons, value. So we'll go to process A. So how many tons were introduced? 2,800 tons to input. 2,800 tons at what value says? At rupees 40 per ton. So 2,800 into 40, 1,12,000. Then labor cost, 20,608. Then office and administration, So divided by 3 we had done 5189. 5189. So then the problem says in each process 4% is wastage, he says. By wastage, by loss in weight, in the bracket 4% on 2,800. So 4% on 2,800, 2,000 into 4 divided by 100 into 4 divided by 100, 2,800 into 4 divided by 100. So 112 units, no value. By scrap, 6% on 2,800. So 2,800 into 6 divided by 100, 168. So how much realization value? Which are at rupees 6, 168 into 6, 1,008. Close the ledger. We'll go to working note now. Output is equal to 2,800. Out of that, 112 loss in weight minus 168. 2,800 minus 112 minus 168. 2,520 is the output. 2,520 is the output. Transfer it to next process. Transfer to warehouse. 33.13% is nothing but 1 by 3. 1 by 3 is 840 tons. 1,680. Transfer it to next process. Equal to 66. 2 by 3%. This is 2 by 3. So 33 1 by 3 is nothing but 33.33, or we can say 33 1 by 3 is 1/3 of 100. 66 2 by 3 is 2 by 3 of 100. Your total output is 2,520. 840 will be transferred to warehouse. 1,680 will be transferred to next process. Then regarding the expenditure, you got 112 followed by 30 plus 20,608 plus 5189. So 1,37,797. This is 2,800. Transfer to warehouse. Transfer to B process. Transfer to warehouse. 840. $1,680. Now the value you have to find out. The total expenditure, working note number 1, this is 2, total expenses, is equal to 1,37,797, 1,37,797, 1,37,797 minus amount realized 1,008. It is 1,36,789. 789. Then 1/3 transferred to warehouse. 1,36,789 divided by 3. 45,597. 45,597. Leftover is 91,192 transferred to next process. So this we have to work out. 14,597, 1,680, 91,192. Then total is 2,800, 1,37,797. So 2/3 of the process, 1/3 goes to warehouse, 2/3 goes to next process. The value are rounded up. 14,597, 91,192. We can make a 6, and here are 6 and 3 also we can make. So I can make out the round figure. So next process it will be transferred. I think here this is 1/3 of the unit, 1/3 of the value, 1/3 of the 2/3 of the unit, 2/3 of the value. Then we'll go to process B. Say particular tons value, particulars tons value. Give the transfer entry from the last process. Process A, transfer 1,680 tons, 91,192. This is your transfer entry. We'll go to transfer entry. Now, we'll have the questions now. Second unit. How many tons were introduced here? 320 tons. Input 320 tons. At what rate? 320 tons at the rate of rupees 64. At the rate of rupees 64. 320 tons into 64. It will come 20,480. Labor cost. Labor cost 12,560. 12,560. Office and administration. Same thing, 5,189. In each process, 4% is wastage, 6% is scrap. By loss in weight, 4% on total, on 2,000 units. 4% means 80 tons, no value. By scrap, 6% on 2,000 units, total 6% on 2,000 units, that is 120 units. So your realization value goes to 10 rupees. So 1,200. Transfer to warehouse. %. Transfer to next process. %60. Out of the total, transfer to next process. Here, add the figure. This is 2,000. Add this. So 91,192 plus 20,480 plus 12,560 plus 5,189, 1,29,421. 1,29,421. Come here. 2,000 units. 1,29,421. Then working note. 1. Total output is equal to 2,000 minus 80 minus 120, 200 gone. So 2,080 equals 1,800 tons minus transfer to warehouse 40%. 1,800 into 40 divided by 100. So that is 720 tons. So transferred to next process. This is 60%. Tons. Working note number 2. Total expenses is equal to 1,29,421. 1,29,421 minus amount realized minus amount realized 1,200. Deduct. This is 1, this is 2, this is 2, this is 8, this is 2. 1,28,221 here minus transfer to warehouse 40%. 1,28,221 into 40 divided by 100. 51,288. 51,000. Here 40% goes to B. 51,288. Deduct 1,28,221 minus 51,288. 76,933. This is transferred to next process equal to 60%. 76,933 will go to 40% is 720. So 60% is 1,680. Value 720 is 51,288. Then 60% is 76,933. 76,933. So 60% goes to next process, whereas 40% will go to warehouse. So last process, process C, particular tons value, particulars tons value. Give the transfer entry to transfer from process B. So 1,080 transfer to next process. 1,080 transfer to next process. 720 tons. How many tons? 1,080 tons. 1,080 tons. What's the value? 76,933. 76,933 tons. Last process. Input is process C. Your input is 2,520 tons. 2,520 tons. At rupees 28. Multiply 2,520 tons. 2,520 tons into 28 is equal to 70,560. Then labor cost. Labor cost of these. Labor cost. Process labor cost is 11,580. Office and administration. Office expense. Office and administration. So 5,189. Then by loss in weight, 4%. 4% on total amount 2,520. 2,520. 2,520 plus 1,080 into 4 divided by 100 is 144 tons. No value. By scrap, 6% on these 3,216 tons. What's a per ton value? Last one. Per ton value, 12 rupees. 216 into 12. 216 into 12. 2592. So the entire 100% goes to next process. So this is 3,600 add 76,933 plus 70,560 plus 11,580 plus 5,189 1,64,262 3,600 1,64,262 deduct. So you bring out the difference. $3,240 tons value. $1,61,670. Buy finished goods. Transfer to warehouse. Transfer to warehouse. Then cost per ton. Process A. Process A. 91,192 divided by 1,680. 91,192 91,192 divided by 1,680. So 54.28. Then process B, transfer entry. So 76,933. 76,933 divided by 1,080. 76,933 divided by 1,080. 76,933 divided by 1,080. So 71.23. Regarding the C, 1,00,000 61,670 670 divided by 3240. 1,61,670 divided by 3240. So 49.89 means 49 rupees 90 paisa. So this is your per ton value. This is your per ton value. Hope you understand this. Cost per ton. We have done the process A, process B, process C. So it goes in favor of the contract account. In a contract account, we have got two parties are there. One is called contractor, another is called the contractee. Contractor is one who executes the work, whereas a contractee is the owner who wants to construct the building. If we go through the way, the contract price was, so the value is not given. So Mr. Satyanarayana, the contract price is given. The contract price was 1 crore 60 lakh. So they had given the trial balance. So here the share capital will go to liability side of the balance sheet. Creditor will go to liability side of the balance sheet. Land and building will go to asset side of the balance sheet. Cash at bank will go to asset bank. This will go to contract account. 80% of the work certified means, so cash received is 80% means they have not given the work certified. You have to calculate that you have to. Then of the plant and material charged to contract, plant costing 1,20,000, material cost 96 were destroyed in an accident. On 31st December, plant which cost 1,60,000 was returned to store. The value of material, let's say it was 1,20,000, uncertified was 80,000. So first you have to calculate the working note. Working note number 1, work certified. Is equal to 100 divided by 80 into, what's your cash received? 64 lakh. That means if we receive the cash 80, your work certified is 100. If we receive the cash 64 lakh, what's your work certified? I repeat, if we receive the cash 80, your work certified is 100. If we receive the cash 64 lakh, it is 80 lakh. What is your 80 lakh? Work certified. On this 80% is 64 lakh. That is working note number 1. Working note number 2, calculation of planted site. Calculation of planted site. What's your plant value? Your plant value is 8 lakh. Plant value is equal to 8 lakh minus plant lost. What's the value of the plant lost? Of the plant in which your plant cost 1,20,000 lost. This is a format. Deduct 6,80,000 minus plant returned what's a plant returned? 35 which cost 1 lakh was returned to store, 1,60,000. Deduct 5,20,000 minus depreciation at 10%. You have to calculate the depreciation at 10%. This is 52,000. Deduct 4,68,000. This is planted site that we have to calculate. What's the format? Calculation of planted site. Your plant value is 8 lakh. Plant lost is 1,20,000. How much plant returned? 1,60,000. 5,20,000. Depreciation on this 52,000. Planted site is 4,68,000. So working note number 3, plant returned. What's the value of plant returned? 1,60,000 minus depreciation 10%, 16,000. This is 1,44,000. You have to show. This is before depreciation. This is after. This is a calculation which you have to make. So whatever he says, so chart to contract, here, this you have to take. So, Mr. Satyan Contractors Limited, Satyan Contractors Limited, date, has the date mentioned the date? Here, 31st December 2018 for the year end date, for the year end date, 31st December 2018, contract price, is 1 crore 60 lakh. 1 crore 60 lakh. 1 crore 60 lakh. You go slowly. What is the first one? Chart to contract. Materials 30 lakh. To materials 30 lakh. So this over. Plant 8 lakh. What is the next one? Plant over. Wages 42 lakh. Then wages 42 lakh. Then expenses 2 lakh. These are all the contract, all the expenditure you have to put on the debit side. Material cost 30 lakh, 8 lakh plant value, 42,000, 2 lakh. So what is the first sentence they say? Of the plant and material chart to contract, plant costing 1,20,000, material 96,000. So last now, by profit and loss account, plant lost. What's the value of the plant lost? 1,20,000. Material lost. Plant lost is 1,20,000. Material lost is 96,000. Add the figure. $2,16,000. Then planted site, plant at site, what you have calculated, 4,68,000. 4,68,000. Plant returned. Plant returned 1,44,000. Then What is next one? Plant which cost 1 lakh return. Material at site. Material at site. What's the material at site? Development answer 1,20,000. Work in progress. Carried down. Work certificate. Work certified. What is the work certified? 80 lakh. Plus work uncertified. What is the work uncertified? 80,000. This becomes 80 lakh, 80,000. 80 lakh, 80,000. So totally it will work out 80 lakh, 80,000 is work out. This is 2,16,000 plus 4,68,000 plus 1,44,000 plus 1,20,000 followed by 30 plus 80, 80, 30, 90 lakh 28,000, 90 lakh 28,000, 90 lakh 28,000, 30 lakh minus 8 lakh, 8 followed by 50, minus 42 lakh, minus 2 lakh, 82 lakh, 80,000, 828 followed by 30, 8 lakh 28,000. This is notional profit. Carry it down. Then move on to next one. Same thing. Here, particulars, amount, particulars, amount. Transfer entry. By notional profit brought down 8,28,000 to profit and loss account. So what's your problem says? No, if the work certified is 50% of the, what is your contract price? 1 crore 60 lakh, 80 lakh means 50% has been completed. If the work certified is 50% or more than 50%, less than 90%, you have to charge 2 by 3. That's a law. So 50% is 2 by 3. 50 to 90%, 2 by 3 you have to charge. So 8,28,000 into 2 divided by 3. Cash received is 80%. Your work certified is 100. 8,28,000. Then 2 by 3 into 80 by 100 into 2 divided by 3 into 80 divided by 100. So 4,41,600 to profit in reserve, balance 8,28,000. 8,28,000. So 8,28,000 deduct 3,86,400 profit in reserve. So how much profit has been kept aside? 4,41,600. How much kept in the reserve? 3,86,400. Now we prepare the balance sheet. Balance sheet. Liabilities. Rupees. Assets. Rupees. You go with the trial balance. What's your share capital? 32 lakh. That is a liability. Share capital. $32 lakh. Then what is next you got? Creditors. Creditors. 3,20,000. Then come back. What is next one you got? Building. Asset. Building. The building is 13,60,000. Cash at bank. It is 3,60,000. As per your trial balance, your building value is 13,60,000. Cash at bank is 3,60,000. Then planted site, whatever you calculate. What's your planted site? Here, what's your plant? 4,68,000. Plant returned. What's your plant returned? 1,44,000. Material at site. $1,20,000. Then work in progress. Work certified. 80 lakh. Plus uncertified 80,000. This become 80 lakh, 80,000. Work certified is 80 lakh. Work uncertified is 80,000. Become 80 lakh, 80,000 minus profit in reserve. Minus profit in reserve. What's your profit in reserve? 3,86,400. Deduct 80 lakh, 80,000 minus 3,86,400. 80,80,30 minus 3,86,400. 76 lakh 93,600 minus cash received. What's your cash received is 64 lakh. So it comes to 12 lakh 93,600 12,93,600. Come back here. Profit and loss. What's the profit? 4,41,600 minus plant and material lost. Minus plant and material lost. This is 2,16,000. Deduct 4,41,600 become 2,25,600. Add the figure. 32 lakh, 35 lakh, 37 lakh, 45,600. 37 lakh, 45,600. Come back here. 13,60,000, 3,60,000. 13,60,000 plus 3,60,000 plus 4,68,000 plus 1,44,30 plus 1,20,30 plus 12,93,600, 37,45,600. So it will tally for 37,45,600. 37,45,600 balance sheet asset at 31st December 2018. So it will tally for 37,45,600. So we'll go to last problem, reconciliation statement. Hope you understand this. Hope this percentage, here the law says if the work is started and completed in the same year, whatever the difference comes, that goes to profit and loss account. If the contract is started and completed after 2 or 3 years, we have to calculate the profit like this. If you have to compare with the work certified at the contract price, if the work certified is less than 25% of the contract price, whatever the difference comes, that will go to profit in reserve. If your work certified is exactly 25%, less than 50%, 1/3 of the profit should be transferred to notional profit. If the work certified is 50% of the work certified, but at exactly 50%, less than 90%, 2/3 should be charged. Here I charge how much? 2/3, because 80 lakh is there. Your contract price is 1,60 lakh. Exactly 50% is there. I have taken 2/3. It will work out 4,41,600. Then this profit is in reserve will be deducted. This out of the profit, whatever the plant loss and material loss will be deducted. Last problem. You'll move on to last problem. So this is the reconciliation problem. Now reconciliation statement. Profit as per the cost book, profit as per the financial book. If there is any difference, we have to make the reconciliation that we are going to do now. So this cost sheet is given. This is profit as per profit and loss account. Your sale is 24,000, unsold is 400 units, means totally production is 24,400 units are there. So work in progress, interest on securities are there. I will explain. Then the problem says the company cost record shows for the same period show that production overhead have been allocated 20% of prime cost, administration 6 per unit, selling price is charged 8. You are required to calculate statement of cost and profit and reconcile. So you have to prepare a cost sheet and make the what's called costing profit. Then you have to prepare whatever you have to prepare is nothing but you have to prepare another cost sheet. You have to prepare cost sheet. You have to prepare and reconciliation you have to make. So what is cost sheet? As per the third semester, you already studied in the third semester. Anyhow, I'm going to repeat now. Direct material, direct labor, direct expense is the prime cost. Add factory expenses, add opening work in progress minus closing work in progress is your nothing but factory cost. Add office and administration expenses, that is called cost of production. Add opening stock of finished goods minus closing stock of finished goods, that is the cost of goods sold. Add selling and distribution expenses, that is the cost of sale. Add profit, that is the selling price. I'll repeat once again the cost sheet. Direct material, direct labor, direct expense is the prime cost. Add factory expenses, add opening work in progress minus closing work in progress minus scrap sold, whatever the difference comes, that is called factory cost or works cost. Add office and administration expenses, that is the cost of production. Add opening stock of finished goods minus closing stock of finished goods, that is the cost of goods sold. Add selling and distribution expenses, that is the cost of sale. Add profit, that is the selling price. Now, here he has to prepare the cost sheet. So, first you have to prepare the cost sheet and find out the profit, and you have to make the reconciliation. We'll start with statement of cost sheet. Statement of cost sheet. What's the direct material? 2,75,000. Material cost 2,75,000. Then direct wages, direct wages 1,56,600. Any direct expenses there? No. Add the figure. This is 600. 4,31,600. This is your prime cost. Plus factory overhead 20% of prime cost. Four lakh 31,600. 4,31,600 into 20 divided by 100. So 86,320. It is 86,320. Deduct, add the figure. 5,17,920 minus closing work in progress 96,000. Deduct this is 4,21,920. This is your works cost. Add office expenses. What the problem says? 6 rupees of unit produced. 6 rupees of unit produced. See that 24,000 plus 400. 24,400 at rupees 6. 24,400 into 6. So 1,46,400. 1,46,400. Add the figure. 5 lakh 68,320 minus closing stock. What's your cost of production? This is 5,68,600 is your cost of production. Five lakh 68,320 divided by your cost of production 24,400. 5 lakh 68,320 divided by 24,400. So 23.2918 cost per unit. Closing stock, how many units are there? 400 units are there. 400 into 23.2918. 23.2918 into 400. It works out 9316, 9317. We'll continue with that. Particulars, rupees. So if we deduct 5 lakh 68,320 minus 9317. So 5 lakh 59,003. 5 lakh 59,003. 5 lakh 59,003. This is the cost of goods sold plus selling expenses of units sold. What the problem says? Selling or have been charged 8 per unit of units sold. So units sold is your, what's your unit sold? 24,000. 24,000 units sold at the rate of rupees 8. So 24,000 into 8, 1,92,000. Add 0.03, 7,51,003. This is the cost of sales plus profit, EBITDA, selling price. What's your selling price now? 9,60,000. Deduct 9,60,000. 960 followed by 30 minus 7,51,003. 2,08,997. 208,997 is the profit. This is as per cost sheet. This is as per cost sheet. You have to compare which are the expenditure you come across. Then we'll go one by one. Working note. Come back one by one. What is the first one? Leave it up. Factory expenses. So CA is 86,320. Here production overhead 85,200. So your CA means cost accounting, FA means financial. When you say CA, it is a cost accounting. When you say FA, it's called financial accounting. What is your cost accounting? 86,320. Whereas your financial accounting, 85,200. So it works out 0, 2, 1, 1. 1,120. See the board. Your cost account is charging 86,320. Your financial charging 85,200. There is a difference of 1,120. Who charges more? CA. More charge, less profit. Less charge, more profit. Who charges less? FA. Their profit have been increased by how much money? 1,120. Increase the costing profit also to make equal. CA charges 86,320. FA charges 85,200. Who charges less? Financial. Their profit will be more, our profit will be less. To make equal, how much should be added? 1,120. This should be added. Then factory expense has gone. This is over. Then come back to office expenses. Closing stock is there. Then next we'll go to closing stock. As per this is finished cost 16,000. If you come back to working progress, we got office expense. What's your closing stock here? 9,317. Your closing stock is, first you will go to office expense, closing stock 9,317. CA 9,317. FA. What's your closing stock of FA? 16,000. Who charges more? More closing stock, more profit. Less closing stock, less profit. Whose profit is less? CA. So what's the difference is? 16,000 minus 9,317. So it works out 6,683. 6,683. Add back to know the profit. So this goes to closing stock. Then we'll move on to next one. Office expenses. Office expenses. Then CA. CA 1,46,400. FA office expenses 78,000. 1,46,400 minus 78,000. So 68,400. Who charges more? CA charges more, less profit is less, financial profit is more. To make equal, add back. CA charges 1,46,400. FA charges 78,000. How much charges more? 68,400. Add back 68 to make equal. Then regarding this interest on security, the profit will be raised. So this is financial profit will be raised. You raise the even the CA profit also. Here, primary expenses. So your profit will be reduced in FA, reduce the CA also. Then goodwill written off, financial profit will be reduced. You reduce the even costing account, dividend, reduce the CA, income tax, reduce the CA. So all this will become minus. All become this become plus. Now, reconciliation statement. Reconciliation statement. Particulars rupees profit as per cost books. So what's your profit as per cost book? 2,08,997. 2,08,997. Add. So what are the plus you made? What is the first one? Factory expenses. Factory expenses. What's your factory expense? 1,120. This is 1. This is 2. Closing stock. 6. This is plus. 6,683. Number 3, office expenses. Office expenses, 68,400. Interest on securities. Interest on securities, 12,000. Selling expenses, see that? Selling expenses, FA, CA. Selling expenses, 1,92,000. FA. Selling expenses, 85,600. $1,06,400. Who charges more? CA. Their profit will be less. Financial profit is more. To make equal, add back. Selling expenses, how much will come? 1,06,400. Add all. 1,120 plus 6,683 plus 68,400 plus 12,000 plus 106,400. 1,94,603. Add. 1,94,603 plus 208,99. 1,94,603 plus 208,997. 403,600. Particulars. Rupees 403,600 less. Go one by one. What is the first one? Good preliminary expenses. Preliminary expenses, 5,000. 1. Preliminary expenses, 5,000 is over. Goodwill, 4,800. Number 3, dividend, 7,000. Number 4, income tax, 11,000. Add. 27,800. 27,800. 403. 600 minus 27,800. 3,75,800. 3,70,000. Profit as per financial books. See that how much you got here? 3,75,800. Here answer 3,75,800. So it is tally here. So regarding this goodwill, other things I will explain. Here, if you see the board now, they charge the delivery expenses, your profit will be reduced. So CA profit also be reduced. Goodwill be charged, your profit will be reduced. So our profit also be reduced. Dividend, financial profit reduced. CA profit also be reduced to make equal. Income tax they charge. So financial profit will be reduced. CA profit will reduce to make equal. So when you start with the financial costing, you have to arrive the financial. So what we did the same. We started with cost book, then we arrive with the financial statement. So first you have to work out CA means cost account, FA means finance. So more expenditure, less profit, less expenditure, more profit, more closing stock, more profit, less closing stock, less profit. So if the financial profit is more, costing profit also be increased. If the financial profit is less, costing profit also be reduced. Today in this session, I solved one process step problem, one contract account with a balance sheet, and one problem of reconciliation statement of 15 marks coverage. So hope definitely it will help you from the examination of point of view. I discuss very detailedly regarding 2021 paper, and in the last session, I discussed about the 5 marks and 10 marks. Today, I discuss about this 15 marks 3 question. Hope you follow. Best of luck in the examination. Please refer this one. It may definitely help you from the student point of view. I request all the students sit in the home, go through this YouTube channel and see that whatever the doubt you have got, you can make the comment. I'll get the explanation for that. Best of luck to one and all for the coming examination. Till then, goodbye by Mr. BSS. Once again, best of luck in the examination. Thank you. Thank you very much.